Hey, what's going on, everybody? Welcome to this week's Weekend Prep and Review. To get started, you can see that I had a pretty light week. I only traded these 2 days, and that brought up, I made a total of $733 profit, and as of right now, I'm only up $1,120 for the month. And the reason I traded only a few days this week and I exited some trades a little early is because of my high water mark. This high water mark, I would get above it and I wouldn't close my positions, and then the market would sell off right before options expiration Friday, and then I'm back below it, and then I'll be above it and then back below it, because it goes off your net liquidating value. So anyways, once I was above it, I closed my positions. I was going to wait it out till next week. And as you can tell right now, the market's getting a little top heavy. And I could also, there's some things I've noticed while evaluating the charts, and I'll go over those as well, as far as like low volume on the way up, but heavy volume on the stall where we're at. Anyways, let's go ahead and break down the trades from last week. So we got two. I closed my laser trade. Oops, that's not what I meant to pull up. We'll go over that here in a minute. Oh, well, I guess I'll pull that window back up. All right, not sure what happened there. All right, so like it says at the top, if you're familiar, I did a 9 days to expiration, 32.35 full call spread for $1.55. The reason I entered the trade is because, all right, so it's mainly all bullish momentum on the multi-squeeze histogram. I got squeezes on the pretty much the mid to larger time frames, higher mid, I guess is what you call it. And all right, so the squeeze, it has everything we look for in a squeeze. The weekly has stacked DMAs with squeeze firing and bullish momentum. And this one has a daily squeeze with stacked DMAs. And the momentum is starting to shift negative, but typically very volatile stocks kind of like shift back and forth, kind of like it did here, shot lower then went higher. So as long as the EMA stayed stacked positive, I was comfortable with it. And also the 2 hour squeeze right here had early in signals indicating it was about to fire. So I had green 10x bars across the larger time frames. And whenever it came back and started testing this support level, I was watching it, and then when it came down to this level is whenever I entered for a ride higher. Ultimately ended up doing exactly what I wanted to do. It shot up to a resistance level, and that's when I ended up closing the position. Just let me get a different time frame there. So you see this 30-minute candle indicates that I entered on there, and then whenever we shot up and started pulling back on this candle, that's whenever I closed the position, I believe for about 70%. Not too bad for a few days. So that was that trade. I mean, textbook squeeze, green 10x bars, everything was saying it was going to shoot higher. I closed Home Depot for a loss. I closed it right before it shot up. So this was actually, hold on, getting ahead of myself. I'm trying to do this more slowly. So an 8 days to expiration, 275, 277.50, bull call spread for $1.60. You see, I lost 396, but after commissions and everything, it was about to 408. Now the setup. It has earnings coming up, so I was expecting maybe a run into earnings. I realize it's coming off the 8 EMA. My stop is at the 34. There's a sweet looking little weekly squeeze going on right here. So all I was wanting was a little pop up to past 275. And then also the 195 minute chart has a squeeze currently firing. So I'm expecting that to keep pushing and fire this one at least up into this trend line. And like I said, I was watching it, make sure it wouldn't close. Market was looking weak. Nonetheless, I ended up closing it for a small loss, and then the very next day, it went right back up, and it would have been profitable, but it is what it is. So yeah, took that loss. All right, next day. This was a hedge. I closed it for a small loss. As a hedge, it was low risk, high reward. I was risking $400 for, I believe, like $2,500. And the reason I entered it because it was at 2 ATR, like it shows right here. And so yeah, up here hitting 2 ATR and expecting a little pullback. And I did close it a little early, and the reason I closed it early because it was a hedge, and the reason I closed it early was because I closed all of my other positions. No reason to have a hedge open if I closed all my other positions. So let's see, Google. All right, once again, in 8 days till expiration, 2085, 2090 bull put for 235. I was playing the 30-minute squeeze, as you can see right here. Stacked EMAs. It looks like pretty much a bull flag formation, just waiting for it to pop up and go higher. It gapped up after earnings. It has been consolidating since then. I ended up closing it for obviously a small winner, like I said over there. And I closed it whenever it started breaking support levels. So I entered right here. Spiked up right here. Obviously would have been a better exit level, but whenever we couldn't get back above these moving averages, that's when I cut it. It obviously trended higher, but when we couldn't get back above and it was expiring soon, I cut it for a small winner. And then I had an Iron Condor on the Qs. It was looking heavy, so I took it for a small winner, but the Qs have been a little, or tech has been a little weak. So this entire setup, I was expecting sideways motion. So I was expecting it to consolidate near this near the 21 EMA level where this white line is. And I didn't expect it to break this 1618 fib level yet. And then, like I said, I was expecting this level to hold as support. And what ended up doing, so here's my upper break even, and here is my lower break even. So all I needed to do is bounce around here going into that Friday, which I did. And then once everything was kind of like canceling out, like this was canceling out my hedge. So my hedge was taking a loss, but this would be profitable. They were just canceling each other out, making a zero. So I just closed them both out and went completely flat. So now I'm sitting all cash at the moment. Like it says, I made a whopping, well, after commissions, $27. Okay, so that's just the trades done this week. Nothing overly crazy. And so next week, hopefully get some pretty good setups and continue on. But we'll go ahead and start prepping for the upcoming week. I will go ahead and show you this. All right, so if you want, you can pause the video and just watch this. I wasn't going to do it live. That way you don't need to sit here and watch me do it. Your time is valuable. But basically everything is bullish. Let me get a different color here. So tech is slightly sideways up, real estate sideways up. Financials are really strong, but I'd wait for a pullback. Consumer discretionary is looking good. Telecoms looking good. Industrials, materials, and energy. Obviously, as it all says right there. The only thing you really need to take note of, and I said it last weekend prep and review, is the consumer staples, healthcare, and biotech. Biotech's looking a little bit sideways. Utilities, I'm thinking, is a sideways play only because the 200 SMA is completely going horizontal. So I don't expect it to break below it. It's just going to chop sideways, which is expected in a market that's kind of somewhat bullish. And if we're going to next week, I am expecting all of the markets to pretty much go sideways, but I will say the small cap, the Russell, is looking pretty strong. And over here in the notes, I wrote these down, and I'll show them too because I think they're significant. So, consumer staples, which is XLP, is below the 50 SMA. It's trending lower. It's hitting a resistance trend line. Oh, let me fix that. Right there where it says now or not, that is supposed to say now, because last week it was not below it. Well, that don't make any sense because I just said it was. Anyways, doesn't matter. On Friday, it closed with a bearish engulfing candle with above average volume. Also, this is no longer pertinent. I swear I updated this. And healthcare, XLV, is a weak sector. It also closed below its 50 SMA, bearish candle, and above average volume. All right, so let me cover those sectors real fast. All right, so here's healthcare. It honestly just has a bear flag, and it broke down, closed below the 50 SMA, which is this blue line, on above average volume. So next, it's probably going to come down and test about this level, maybe here. Anyways, it's looking bearish at the moment, at least sideways down, because the market is overall strong, but I'm expecting it to go sideways to down. If you need any bearish plays, I think that will be a good sector to go hunting for some. And another one was XLP. So you see that trend line from last week held true. It's below the 50 SMA still. Here's that trend line I drew last week or so. Close below it on above average volume. Probably come down and test that low right there, because we already did the gap fill and we're all the way through it. So next stop, this level. And consumer staples makes sense for it to be weak as well, with the overall market being strong. All right, so that is that. Now I'll go over the overall market. All right, so this is what I was talking about. We broke this 1272 fib line. We couldn't get up to the 1618, and these fib levels are drawn from that high to the swing low from the recent last decline. Let me get a different color since it's all yellow. You can see we've been dancing with this fire line, which is a voodoo line, and it's just basically a support level created by David Starr. I don't have a subscription to their service, but whenever I catch them on their free videos, I'll go ahead and make note of it on my charts. So there's a little free hack for you guys out there. And okay, so this is what's considered. So you see this decreasing volume down here? So right there where I drew the line, it was decreasing on the rally higher. Now that we're consolidating at this level, the volume is higher. Just something to take note of, see what happens. and see if we go higher. Now it's just a big inflection point. Are we going to pull back? We could potentially, what I'm thinking, if we do pull back, obviously to the 21 SMA, potentially the 34 before we continue higher. And going into March is a quad witching month, so monthlies and quarter options are going to be expiring. So expect a sideways market. That's why I have a 0. And I'm expecting to go into March completely, probably just like this, all the way through. That's my current thesis. Could be wrong. I've been wrong a bajillion times, as you could tell. I have those losses in my trading view account, or my trader view. All right, so tech. We rallied up right into the 1272 extension. Once again, brought up from the swing high to the swing low. That recent decline when the whole GameStop took some hedge funds out and whatnot, that whole thing. We have pulled back, tapped the 21 EMA, and now we did go back up, but then we sold off. So I am also expecting this one to kind of go sideways. And if you look at the rut, this one, and if you look at some other sources, it has also shown that small caps are getting all the money. So my small caps went down to 21 SMA and rallied right off of it in a solid pullback, and then looked about above average volume on that candle off the 21 EMA. That's something to watch to see if we could break this. If you're looking for some momentum plays, that might be the place to look. All right, so that. All right, now the setups I am watching going into next week is kind of thin, nothing crazy, but I'll show you what I'm looking at. I got my green 10x bars. I'm waiting for a pullback. Woo, that was bad. But right here, my green 10x bars, my squeezes on watch, and then my reversal plays. And we'll go ahead and cover those. So Amazon, squeeze on watch. Now I want to see how this one plays out, but if you look over here, let me put this on that one. All right, so there is a really solid weekly squeeze going on right here. It's going to form a big old flag before going higher. All you need is this high compression squeeze to start turning around, and boom, just like I did right here. All right, so it's got stacked EMAs. It's currently below the 34 EMA, which is kind of my stop level. But we do have a squeeze going on, so at the open, potentially can go back higher and resume where it's going. And the 195 minute isn't really showing anything of value. But anyways, it's on watch, waiting for that blue momentum to peek its head back up before going long. And I'm also eyeing this. If we do get a dip down to the weekly 21 EMA, I might throw on a credit spread, a long-term one, to hold it through as it's consolidating. What is next? Sorry, squeeze and wax. All right, I did a pretty decent trade on this the other day. Still looks very good. If you recall, if you watch my last week, maybe week prior, weekend prep review, I caught this. I entered on this candle and exited right there, right at that top the next day. But anyways, you can see it's still a very valid setup. Still has a squeeze, low compression now, momentum shifting higher, stacked EMAs. It's playing with the 1272 fib level. I want to dip down to the 21 EMA, or if it comes up to it and touches it. That's just what I'm watching for that setup. That's why it's on watch. Typically what I do is when I set these up and the market opens, I'll come over here and click this arrow. And most of these are all bullish plays, and I'll make it to where I have the ones that are opening lower at the top, and I'll start scrolling at those, seeing if they're opening up at the 21 EMA or at my entry zone. And then I'll enter the trade if they're there, and then hopefully catch a reversal at the open. That's kind of how I've been doing some of those. All right, Chewy, still very solid setup as well. Weekly standpoint is EMAs are stacked positive. completely good. All right, daily, same thing. We're getting early in signals, which is those green line or those green candles right there. Early in signals indicating the squeeze is about to fire. There is a low compression squeeze, bullish momentum. I mean, everything's there. All you need for this trade is price to come down to the 21 EMA, which is currently at about $108. If we get a little flush to there, enter the trade, write it back up. You enter on the flush down with anticipation that the larger time frame trend will continue higher. So we got Chewy on watch and Restoration Hardware I've been watching as well. I wanted to enter this trade so bad last week, but I didn't because of my high watermark issue. Or not issue, I just didn't want to mess it up. Didn't want to screw it up. But because I saw this candle close, and then the next day I was eyeing it on this candle. So don't do it, don't do it, don't do it. And then obviously would have worked out, but it is what it is. The setup is the same as always. And if you haven't seen yet, I did put an ultimate squeeze guide to trading it, or to trading the squeeze. I posted it the other day on the channel. So go ahead and check it out. Let me know what you think. But anyways, and it stopped right at the fib level. Now we got a mid-compression squeeze with bullish momentum, which is that light blue color. Stacked EMAs. All we need is an entry at the 21 EMA. That's it. That's how simple it is. All right. So those are my squeezes. I'm watching for a dip down. We went over the sectors. Oh, we didn't go over. All right. Green 10x bars. Wait, not number. Reversal. So one way I use the 10x bars is I'll scan for the red arrow to tell me for a pullback is happening, and I can wait for it to come down to my entry point, which is the 21 EMA. So how this trade setup works, the larger time frames are all bullish. It's bullish here. There's no squeeze, but if it comes down to 21 EMA, and then on your 30-minute, 15-minute, whatever you wish to use, you get a buy signal off of that 21 reversal, and then that's your stop, and then you ride it higher. But I got Microsoft waiting for that dip. Disney I am liking quite a bit. So why do I like it quite a bit? This is one that's going to the top of my list. I do have green 10x bars on the larger time frames. Here is support, right? It's a support level. It is stopping at the level. It's not quite getting to the 21 EMA. I don't know if it's going to get there, but I'm acknowledging it. But if you go over to 30-minute chart, you can see that it is just consolidating at that support level. So it's bounce, held, and it just held and holding and holding and holding, and then boom, another buy arrow. So this particular setup, since I am anticipating entering it on Monday or Tuesday, this is what I'm looking for on this setup. So, like I said, green 10x bars, consolidating right on support. My stop level is the 34 MA, which is about 177.80. So that's the zone. And like I said, I'm expecting sideways movement for the market. And there is no squeeze on Disney, no squeeze. So we look over here on the squeeze chart. It's getting early out signals, but it's still bullish. But there's no greater than expected move. But move is still higher, just not greater than expected move. So I just want to throw an out of the money butterfly. So we'll say it opens a little higher, and we'll say I get it for 310. And I'll break this down real quick. So over here is your risk to reward. If you don't know how to read this, down here is stock price. And it's really easy. Basically, I just need price to stay between here and here for break even. And those numbers are, so price would just need to stay between, if you look down here, I'll tell you. Oh, we'll do it at a 100. I'm going to enter 4, which would be a little over $1,200 max risk. But max risk of 1 would be 310. Break evens at 183-ish on the low side, and on the high side, it is about roughly 197. So you could risk 310 to make roughly $690. And all you needed to do is go sideways up to about 390, which is this support level. But if it keeps on going, then you can kind of get up here. Be okay. It rarely just will take off, especially if there's no squeeze, but that is what I am looking for. And there is a completely good possibility that it will just ramp right through it. That I am not completely discounting. That is a possibility. And then if you have to, if you want, you could also, if you wanted to like really widen it, you widen your net, if you will. So one position would be max risk of 675. If you hit around your target, you still make more than 100% return, and now you have a wider net. So it's really all down to how aggressive do you want to be. But I believe the 200 to the upside is okay, because let's way up here. Let's draw some fibs real quick. Let's see where so here to here. All right, so we have the 1272 level to keep us pinned down, and then we also have this 1618 level to keep below us. So those are resistance levels. So I do believe we'll still go higher, but I don't think we'll surge right through these levels. It's possible, but they're not always likely. And so those could be levels that you expect to hit, pin a little bit, and then go up a little more. So anyways, it's a low risk, high reward probability trade is what I'm getting at without beating a dead horse. All right, cover TXN already, cover my Microsoft. All right, so next is my reversals. I'm liking QCOM, not gonna lie. Here is another one. Okay, so QCOM, like I said, solid. I find a good reversal setup. Larger time frames are green relatively, except for the one daily. You gap down on earnings, gap down. So what do we see here? So gap down, down to this 1618 fib level, and you can see it's holding. And there is a buy signal, buy arrow, and the red 10x bars just turned yellow, indicating that momentum is shifting. So you would enter this trade with your stop at the lows, expecting it to drift higher. And you can go to your larger time frame lower time frame, and you can see every time we got close, it bounced up, bounced up, bounced up. It's just not breaking this level. I personally am expecting it to go back up to about 150. That's what I am looking for. This is another one I'll probably enter on Monday or Tuesday, and this is a setup I was looking at doing. I was looking at selling the 148 put and hedging with the 140, which is a delta, selling the delta 60, buying the 130. So basically, I like that setup. Selling the delta 60 and buying the delta 30, and this is why. So my max risk is $413. Max profit is $387. It's not perfect 1-to-1, but it's close. And what I do like about it is all I need, because here's stock price, right? It's right here. All I need is for price to go sideways to up. That's it. For us, I have a small winner or I have a bigger winner. And then I could also, if I wanted to be super creative with it, like I could, if my stop is below here, which is 143-ish, right? You can, if I wanted to sell outside of it, go 143, probably hedge it with that one because it's the most open interest. So you only get $1. So you risk 2,000 to make 900, is close to 2 to 1, which kind of goes just with that my 2 to 1 risk reward video that I've created a while back around the squeeze. So if your stop is at 143, if you look at, so you're risking from a 10 lot basis, or we'll do 1 lot basis because not everyone trades with 10 or so. So 43, you're risking $23 to make $92, but your max risk is $208. So that's how that works. You sold below your support level. But if you want a little bit better risk reward, which is something I'm working on for 2021, my stop is at 143. So I am at expiration, it'll be $118 to make $387. That's how that works. So I always use this line because that's at expiration, because that shows you realistically if it goes up and then shoots back down, that is what your max loss is. If you use this line for your loss, as your stop loss analysis, whatnot, it's going to vary because it changes as theta decay happens. But anyways, QCOM. I'm liking it for a reversal, just back up to the 21 EMA at about 150. That is what we're watching for next week. And Dr. Horton, just like all the other stuff, green to next bars, $2 time frame, pulled back to the 21 and 34 EMA, closed on a hammer candle, and now we're drifting higher. This one looks good for a move higher. I don't believe there is a squeeze. There is a squeeze, but it's low and still has a lot of shifting to do. But this one particularly, I am not 100% sure I want to do it because open interest is an issue. I like my trades to be anywhere from 14 to 9 to 8 days, days to expiration. This one, I think all of the open interest is only on the monthly, and for some reason, Thinkorswim has been doing this all day where it won't even load the option contracts. But, let's see, what about this one? You know, say I'm not liking the open interest. So anyways, but I am watching it, see what happens. Maybe when it opens, it'll fill up and look much better. And yeah, so that is it for the weekend prep review. I know the list was small. I'll go ahead and open it right here if you wish to see what it was again. So we got reversal, squeezes on watch, and green to next bars. So there you go. Thank you very much for watching. I'll also say my favorites right now are probably QCOM and Disney, because they look like they're going to bounce off that support level. All the other ones need a pullback or so to the 21 EMA, but for Monday, that is what I'm looking at. And thank you very much for watching. If you found this video helpful, please subscribe, like, share. If you haven't seen it already, I'm starting a new account challenge, a new small account challenge. I didn't say completely, but I did blow the other one because internet loss is what blah blah blah. There's a whole video to describe it if you wish to see it. But in this next one, I am putting 2,000 in, and I'm going to grow it large enough to where I can buy or purchase a rental property and rent it out. And another thing I'm going to do to help it grow a little faster is if and when I become monetized through YouTube, through you awesome people from watching these videos, that once I'm monetized, I'll roll the profits from YouTube into that account and grow it into where I could potentially buy a rental property. I think it'd be kind of cool. I don't think very many people have. I know people have done that before. I've read John Carter's book where he says he's grown small accounts and purchased rental properties, which I think is a brilliant idea. It's kind of like where I got the idea, but I've never seen it done on YouTube. Like it hasn't been documented, I don't think. But anyways, I'm gonna give it a shot. So if you want to wish to help me out to reach that goal, subscribe, share the videos with your friends, tell everybody about it, and blah, blah, blah. Just like every other YouTube person, they say the same things. So anyways, enjoy the rest of your weekend. Thank you for watching again, and take care.